To our website for some reason. There's a small W. Doesn't work. That's just this one. Okay, thank you. We do have trustee, or Mayor Pro Tem Drysdale on the phone. He's on. Okay.
I'm here.
Thank you. Okay, we're about ready to get started. Okay, I'll call to order the special meeting of the Lions Board of Trustees for Monday, July 23rd, 2018. Will the clerk please call the roll?
Mayor Sullivan.
Present.
Mayor Pro Tem Drysdale. Trustee Farrell.
Present.
Trustee Caravas.
Present.
Trustee Waugh. Trustee Miller. And Trustee Browning.
Present.
Okay, we do have a quorum, and just for those in the audience, Mayor Pro Tem will participate by phone, but will not be able to vote today. So please stand for the pledge of allegiance. I pledge allegiance
to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Okay, is there a motion to approve the agenda, please?
So moved.
Is there a second?
Second.
Any further discussion? Just one question for staff. So this is the audit presentation, but there's no resolution to accept the audit. Is there going to be an action item at a future meeting? No? We don't have to
We
do
always
anything?
just accept it and then it's done. We haven't done it with a resolution before, so.
Okay, so if you need a motion to accept the audit, I'll just notify the board that someone would need to make that motion. Okay, with that, we'll go ahead and vote on the approval of today's agenda. And the agenda approved 4-0. Okay, we'll turn it over to staff.
Well, this year we contracted with the Adams Group, previously known as Boyce and Adams, to conduct our town audit as well as a single audit that was required due to the level of federal funding we received. And we also implemented the services of Carl Marshbanks to help us prepare for our audit, who previously has assisted us before, Anna Kanyada, Finance Director, and then James Ray, who was the lead, is that what it was called? Auditor on our audit, and Mr. Adams, so are here to present the audit this year. So Anna, I don't know if you have anything more you want to add before they start.
No, but we just want to make sure that you have all the pieces of, you have the single audit with you, and I just gave you that corrective action plan that it was not included initially, and then you have the actual audit results, and then the management letter that you have, you know, that Jim Ray will address.
Okay, thank you. I'll go ahead and let the auditor take it away.
Well, thank you for having us here this afternoon. I'm Jason Adams, the managing partner of the Adams Group. And as Victoria stated, Jim Ray's my engagement manager, the engagement partner on this engagement. And I'd just like to thank the town and Victoria and the finance staff for getting the audit completed. We'll have this thing completed before the deadline of July 31st, which is well in advance of what it has been in the past. So I'd just like to thank the town for that. And I'm going to just have Jim go through the basic financial statements and the single audit in draft form pending your acceptance today. And then after that, I'll go over the letter to those charged with governance. Jim Ray.
So I'd like to start with the basic financial statements and start with about the what would be A1, the independent auditor's report. And as we say every year, the second paragraph says that these financial statements are the responsibility of management. We would also submit that the responsibility of the board and the other members of the town to make sure that the numbers and the disclosures are an accurate and fair representation of what occurred last year. Our job is to simply express opinions. As you can see under auditor's responsibilities, it is a plural. If you were to look at General Motors financial statements, for example, there is one opinion. For the town of Lyons, there are 6 opinion units. Each of the major funds is an opinion unit, and then the 2 funds, the 2 government-wide perspectives are also opinion units. So we could say that the general fund is fairly stated, but the grant fund is not fairly stated. So it just kind of says that this is a fairly complex entity, and there's a lot of moving pieces to the town of Lyons' financial statements. If you turn to the top of page A2, that is the opinion. And it's a clean opinion, an unmodified opinion, the best opinion you can get. Again, it says that the numbers and the disclosures which follow are an accurate representation, and that nothing was left out or hidden from a reader of the financial statements. Right below the opinions are some emphasis of matters. This is somewhat unusual, but we've had a couple of these in here for the last several years. The first emphasis of matter is there's a receivable amount in the grants fund of almost $6 million for federal funds. How much of that will be ultimately collected is unknown at this time. We think that the town does a good job of submitting only costs they believe are eligible, and also working to make sure the costs are eligible. But you're subject to probably not only audit by the state, but you'll be subject to some kind of closeout audit by the feds. So these numbers are going to get scrutinized pretty hard. We don't know how much of that 5.9 or $6 million will be ultimately allowable. If it's not allowed, obviously the town's going to have to come up with some way to repay those funds. And as we get to the general fund, we'll see that the town set aside that $600,000 as kind of a cushion to repay some of those funds. And so the town started to look at this issue. The second issue, again, it kind of ties to the first, is we don't know how much of the costs, again, are going to be deemed ineligible. Right now, our best guess would be $360,000. Your staff may say that number's a little bit high, that they can rework some of those numbers, that the state will let them put it into another grant or repackage it. But right now, again, we think the grant fund is about $360,000 short. But again, that's an estimate, and it's a big guess, okay? Finally, the state in their last monitoring is starting to push the town to talk about when they're going to repay that $9.5 million in advance funds. Obviously, if the town has to repay that rapidly, there's not going to be any money coming in to fund the grant projects. If the state's a little bit nicer and a little bit kinder and gives you some time to pay this off, then there may not be as much of a cash crunch. But right now, we don't know how significant the cash crunch in 2019 and 2020 is going to be. It could be very significant. And part of the problem, as you know, with the federal grants and with FEMA FEMA's withholding 10% of the allowable costs they're going to pay you. So you've got this real long payout tail. So again, future cash flows, the town may have an issue meeting the grant responsibilities and just paying its regular bills. And we know that the town knows this. We just want to highlight it for the readers of the financial statements.
Mr. Ray, sorry to interrupt you, but one of the things I wanted to ask you about in this section, and I looked for it elsewhere, but I'm not sure if I caught every reference or not. Being that this was an advance, the word loan is used in the second to last sentence, and it technically was not a loan. Is there a way to change that word to advance?
Oh, we absolutely can.
Okay.
And the reason we perceive it as a loan is because it ended up in long-term debt.
But there's technical differences here that
and we will
apply
absolutely change that.
for Tabor, so if we could, that would be great.
This might be the right time to put the staff memo where they are also suggesting some other wording about the remaining ineligible costs. So that's something we can talk about afterwards.
Yes, I would just ask if you find any other references to where that's referred to as a loan. If we could please change the word. Thank you.
If you go to B1, this is management's discussion and analysis. This was written by your staff and your consultant. It's a good summary of what occurred and compared to the prior year. This information is now required under GASB 34, but we think it's a good read, again, to get a good summary overview of what occurred. And what occurred begins on C1, which is the statement of net position. And as you see, here are two of your opinion units, the governmental activities and the business type activities. The business type activities will look like the enterprise funds that follow. Excuse me. The governmental activities have now been moved from a budget perspective to a business perspective. In other words, all of your assets are recorded here, and all of your long-term debt is recorded here. If you were to compare this year's governmental activities to last year's governmental activities, you would find that total assets are up about $7.3 million. $1.5 million of this is in cash, and about $5.8 million of this is in capital assets. Liabilities are up slightly, about $600,000. If you get into the net position, which is your equity section, you will find net investment in capital assets, which is the amount of capital assets that the town holds, less any debt that was used to purchase those assets, went up about $6 million. Grant expenditures, the amount of restrictions actually dropped about $1 million. Unrestricted went up about $1.7 million. And again, overall equity went up about $6.7 million. The business type activities, what I will tell you is the biggest difference between this year and last year was basically, I think the town in a smart move is building all of the assets that need to be rebuilt due to the flood, including those belonging to the enterprise fund, i.e. the public works building, the water lines, etc. All those are being built in the grant fund, if you will, financially, and then when they're completed, they're moved over to the enterprise funds. Well, last year they moved about $1.9 million over. This year there was nothing to move over because nothing was completed. So I think that's the biggest difference in the 2 years. If you look at C2, this is a net expense format. The first line, as you can see, are expenses. Then you have the program revenues, which offset those expenses so that you can see what governmental activities cost and what business type activities cost. In a normal situation, you would expect all the governmental activities to be negative numbers there in the middle column. But because you have so much grant money, which is dedicated for specific purposes, you really only have one negative, which is general government. On the other hand, under business type activities column, you would expect those to be positive. And we know that town staff knows about this and is working on this, but water and sanitation is negative. And in the middle of the page, you would expect water and sanitation to be positive because in a proprietary fund, you're charging enough money to cover your costs. Okay? And so that negative $480,000 to us is a pretty significant number. If you look at the governmental activities, the third line from the bottom, long-term perspective, you made $6.7 million. Well, really what happened was federal revenues bought fixed assets. Fixed assets become an asset, they don't have any expense to them, so the federal revenue, the federal funds gave you about $6.1 million in capital assets. Going to page C3, this, we're back to the budget perspective, and you can see here we've got the governmental funds. And what I will tell you is, here are your other 4 opinion units. The general fund, the grants fund, parks and recreation, and then just a couple other funds put together. If you looked at the general fund, I would tell you the biggest difference between this year and last year was the collection of grant funds. Again, this is a budget perspective. So you say, did we get the revenues in quickly enough to pay the expenses? And the rule there is 60 days. If the revenue comes in February 28th, it's counted for this perspective. If it comes in March the 1st, it's not. And so last year you had the intersection, which was paid for by CDOT and Boulder, and neither of those entities paid within 60 days last year. So in 2016, all the expense was there, but none of the revenue could be counted. In 2017, the revenue could be counted, and as a result, fund balance jumped up $1.2 million. If you look at the grant fund, assets are up about $900,000. Liabilities are up about $800,000. Again, you've got that deferred inflow of resources, unavailable grant resources, or grant revenues, which either haven't been reported and requested or weren't received within the 60 days. And of your $6 million, $5.9 million of grant receivables, 4.7 of it didn't get in within that 60-day period. Basically, the bottom line is grants have $5.6 million of fund balance, and what that is that's the $9.5 million advance, which is slowly being eaten up. If you look at C4, what you would see for the general fund is revenues are down about $800,000. Expenditures are way down, again, because you had that large intersection transaction in 2016. So overall, you made $1.2 million again, just because of that flip in a CDOT grant. If you look at grants, you lost $1 million this year. Again, you're starting now to eat up that advance. If you looked at 2016 without that advance, it was about a positive $400,000. 2015 was a loss of about $1 million. 2014 was a gain of $700,000. 2013 was a loss of $3.25 million. So you can see that the town's kind of on a roller coaster in terms of grant reimbursements and how grants are collected and what's been expended. If you turn to page C6, this is your enterprise funds. And you can see that really everything's pretty normal. I mean, there haven't been a lot of changes. Again, you didn't get a lot of contributed assets. Liabilities are down a little because they're getting paid off. What I'd like to concentrate on is the last number, or the number first from the bottom, unrestricted net position. And basically, one of the things we like to do to measure how strong of a number that is to compare that to the amount of expenditures in that fund. If you look in the electric fund, last year, there was about 66 days of expenditures in that unrestricted net position. This year, that number has jumped to 128 days. If you look in the water and sewer fund, and again, we're talking about that $480,000 loss, last year there was 555 days in there, now there's 424 days in there. So you can see that the electric fund had a pretty good bump, and the water and sewer fund had a pretty good loss. If you go to C8, this is the statement of cash flows, and this is what would have occurred on a cash basis, in effect, in the enterprise funds. And what you can see is operating activities would have brought in about $700,000, okay? That's about $200,000 higher than last year. But if you go and you drop down to the bottom line, the change in net cash and cash equivalents is the electric fund went up $435,000, which is about $160,000 higher than last year. And really, water and sanitation, again, didn't look too good. Overall, cash dropped $600,000, which is a lot bigger drop, or a significant drop compared to last year. Now, if you look down in the first column after the double underline, you can say, the operating loss was $448, we had $644 in depreciation, it's all a paper loss. And to some degree, that's a true statement. But what I would caution the board, and I know the board knows this, is that if you're not setting away enough for depreciation, when those lines have to be replaced, and you've got a big line replacement coming up in 19 in the water fund, you're just not gonna have the money to do it. The notes begin on D1, and what I would tell you is the notes can do two things. Number one, they can hide something that's gonna be a pretty big bump in the night, or they can just not say something. So there's a couple of notes that we want to go through really quickly that we think the town ought to look at. First one is, you've had it for a couple of years, but the LURA, the improvement district is a blended component unit. And that means because the board's the same, management's the same, we're gonna report it as if it's a water and sewer fund or the conservation trust fund or whatever, okay?
Can I ask a
So-
question there?
Yes, sir.
Does that change at all, because under the amended statute now, the boards are not exactly the same? There are members on the URA board who are not on the town board.
It depends on what happens. It depends on who can account. And it boils down to control, really, is what it boils down to. If this board can control that board, then you're gonna be a component unit.
It's a majority.
Yeah, that's right, in effect, or it doesn't even have to be a majority. They can appoint the entire board and just say, if we don't like the fact that today ends with a Y, we can yank you off the board, then it's still a component unit.
Okay.
So that's something that's new and it's changed a little bit. If you go to D4, what I would point to you in about the fifth column down is, as we have done in prior years, or town management has done in prior years, and we agree with, we don't think the town has a Tabor emergency reserve yet. Because at some point, again, given the potential cash flow issues, the town may need to use that Tabor reserve to continue to pay flood costs.
I got a question on that. At what point, you said at some point, but because we had that pre-flood, don't have it now, what's the time consideration in this reestablishing that?
I think whenever the board feels that they have adequate funds, that they can pay everything related to the grant that's left, really in effect, right? In other words, the 9.5 paid off to the state or settled in some way, shape, or form. All of the contractors related to the flood projects are completed, are paid, and all of the flood projects have been completed.
Okay. Thanks.
If you go to D9, the thing I would tell you here is in the middle of or the end of the second paragraph, because of the amount of advance money you have, the town has about $4.9 million that's covered by the PDPA, the Public Deposit Protection Act. And as we probably said in the past, those funds and the coverage is dependent upon the bank's internal controls and how good those are. So it's just something to monitor to make sure that the bank's properly including lines as funds in that PDPA report, and also pledging adequate securities against those funds. Also, there's about $45,000 that are sitting with the credit card servicer, and those obviously have no way to know if those are insured. They're all sitting there in a pool. They're not labeled as public funds. Again, from an internal control standpoint, the lower that number is, probably the better. If you go to D11, as you look at the top of the page, as we've talked about cash, we just wanted to note, and we'll talk about it in the management letter, there's a couple of restricted cash accounts. One due to the deposit, the bond reserve account, and then $34,000, which is just debt service. So basically, those are amounts that need to be carved out and maintained. On D12, again, as we talked before, that second number, additions, there's $5.7 million of additions in construction in progress. Again, some of those are enterprise and some of those are general government. If you go to D15, note 9, land held for sale. Y'all are aware of this transaction. The three parcels that were purchased, one of which went to Public Works, while the other two are sitting here, basically valued at what you paid for them. They will need again to be valued next year if no transaction has been consummated for the sale, but they're an investment. They're held as an investment. They're not held as capital assets or fixed assets of the town.
And is there any time compulsion on that we need to, we reassess the value every year, basically, but right now we're just going on cost.
Well, the reason we're going, I misspoke. They should be valued at fair market value. Well, you bought them a short time ago, so the cost equals the fair market value because of the shortness of the period between your purchase and now. Next year, yeah, there probably needs to be another evaluation, and they again need to be marked to what is perceived to be fair market value. On D17, a couple of things. Note 13, a related party transaction. There's a large receivable out there, and it requires to be disclosed, number one, because the size of it is about 1/7 of the total utility. And number two, it's probably a related party transaction. Below that, subsequent event, as you all are aware, construction on Bone Park has been stopped, and the town's into that for about $456,000. So whether those costs will ultimately be reimbursed is a question. If you talk to the engineering staff, they'll tell you, yeah, it's probable that the town will be stuck with that, okay? But nobody knows what'll happen. And if we go then to E1, start looking at the budget to actual statements. The general fund, what you can see is revenues were about $613,000 higher. Again, that's all that intergovernmental CDOT money. That was offset a little bit by a drop in contributions, and it was also bolstered a little bit by sales taxes that were higher than expected. Expenditures were about $344,000 less than the budget, and that was mostly due to contingency. Overall, you were budgeted to make about $255,000. You made about 1.2, so that's a positive swing of $955,000. On E2, you're looking at the grant funds. The grant funds are obviously budgeted very high because they're just difficult to budget. Who knows how fast the project will go? Who knows what will occur? And so the grants are budgeted at 25 and spent about 10, and that's not unreasonable from our perspective. E3 is the Parks and Recreation, your last major fund. And what you can see here is revenues were about 80 less than budget. And that's again because grants, contributions, and donations were quite a bit less than the budget amount. Expenditures were about $405,000 less because of capital and contingency. You were budgeted to lose about 140. You made about 170, so it's about a $310,000 positive swing. If you go to F5, here is the budget actual for the electric fund, and what you can see is revenues were down about $68,000. A lot of that was sales. Some of that was also contributions. In other words, the grant fund contributing assets or others contributing taps, etc. What you can see though is that $68,000 or $70,000 shortfall was offset by purchase of electricity at $50,000. So what you would expect to see a shortfall in sales and a shortfall in purchases occurred. Overall, expenses were about $372 less than budget. Again, that was electric purchases, that was distribution and maintenance, and finally that was contingency. You were budgeted to make 36, you ended up making 225, again, $190,000 swing. If you go to F6, again, and I know we've hammered on it, and I know your staff's more than aware of it, water and sewer, was budgeted to lose about 456, it lost a little over 500,000, which is a negative $60,000 swing. Contribution revenue and miscellaneous revenue was lower than budgeted. Capital outlay was also, and contingency was also lower than budgeted. There's a highway user report, which is not really much reason to discuss, but that is the financial statements in summary. Are there any questions?
Any other questions?
I had
Trustee Bowman?
In the management letter, there's a discussion of needing to segregate the payroll function. I didn't quite understand that.
Okay, we'll get to the management letter.
Okay.
You know what, number one, we appreciate the questions, and I gotta tell you, this board's making eye contact, and everybody's pretty attentive, and we appreciate that also.
Give us one.
I do have one question before you move on.
Yes, ma'am.
Okay, under, let me go back and find, you said one of the funds we were short pretty significantly on contributions and donations. Oh, it's under general fund. Staff want to elaborate on just what was short there. We had budgeted 335 and we had an actual of 4,986. That's a, is that just something we budgeted incorrectly or?
C4?
Yeah, sorry. No, E1.
Oh.
E1. Can you just elaborate a little more on that variance?
This one?
Yeah, it's all contributions and donations.
From this one? But that was this one.
Yeah.
That was not part of it, right? It's part of the enterprise.
Oh,
funds.
okay.
I didn't know if that was something grant related or was it operations?
I would assume it's
General
probably.
fund, right?
Yeah, I don't remember what was the budget, what was actually physically budgeted as being a contribution.
It'd be on budget notes.
Yeah.
I can look at it.
And it's hard to tell what it's related to without a budget
It's most
detail,
likely,
so maybe
it's
it's just,
likely a reimbursement from a grant or something.
okay. It'd just be good to follow up on that one, just so we can start talking about next year's budget, so if there was something. that-
Well, I had that in my notes. It actually goes across several of the funds, so just kind of elaborate instead of just one, probably all of them, just so we have it.
I was thinking offhand that it might have been the purchase, but that should have applied to general fund
No.
of the land.
Okay, thank you.
I'm
We
looking
can
at the
research
budget.
it.
Yep.
The next thing I would like to go through is the single audit report, which is the federal awards report in accordance with the uniform guidance. As Victoria indicated, because the town received more than $750,000 or expended more than $750,000 in federal funds, during 2017, we were required to do an audit of compliance with federal grants or major federal grants. Our first opinion is basically an opinion on the financial statements in accordance with government auditing standards or the Yellow Book. Here is where we report any deficiencies in the way the town conducts its general business and in the financial statements themselves. There are no opinions here, but what you will find is there are no issues, no findings, no problems, nada. So basically, there were no issues to report at this level. The second opinion, which basically begins on unnumbered page 3, is a report on compliance for each major federal grant. And what I will tell you here is on the top of page 4, there is an opinion on the town's compliance. We audited 2 programs as major, and the town could have received an adverse or disclaimer of opinion, or in your case, as you did, an unmodified opinion. And it says basically that we believe that the town complied with all the requirements materially, so that there weren't any issues that way. But please do understand, and if you pick up other entities, perhaps like the city and county of Denver, you will find that they had a they did not receive an unmodified opinion, I believe, on their TANF program. So it is not something that is rare to receive an unmodified opinion, but y'all did. If that makes any sense. What I would like to do is I would like to go to page 6, and these are your federal grants. And what you can see is you've expended about $6.6 million. Most of that expenditure, as you would expect, was in FEMA, and was also, which was 3.8, and was also in CDBG DR, which was 1.8. If you look at page 8, this is a good summary of, again, what occurred in the federal grant compliance. The financial statements received an unmodified opinion. There were no material weaknesses over internal control identified, no significant deficiencies. There was no non-compliance related to the financial statements. In the middle, if you look at federal awards, there were no material weaknesses identified, again, no significant deficiencies. And we had unmodified opinions on the major programs. Finally, we did have an audit finding, which we'll discuss in a minute. Here are the two major programs, as you would expect, we tested, which was FEMA and CDBG-DR. The threshold to determine what programs we needed to test was programs over $750,000. And the town didn't qualify as a low-risk oddity, and probably won't for the next couple of years, even if nothing changes. If you get a material weakness, and you had a material weakness last year, that'll carry over for a couple of years and preclude the town from being a low-risk oddity. If you go to page 10 is the findings. And basically what the findings relate to is we looked at 80 transactions, 40 for FEMA, and 40 for CDBG-DR. What we found was for about 90 to 80 transactions, some of which were cash disbursements, and some of which were journal entries, we did not see approval on there. And what approval says to us is that somebody with enough knowledge of grants looked at this transaction and determined that yes, it should be charged to that grant. For about 7 of 80 transactions, most of which were the attorney bills, we weren't able to determine how they figured out what should be charged to the grant versus what should be charged to normal town activities. And then there was, again, on one of the attorney bills, they gave a $2,000 discount, but they didn't say which transactions that discount applied to. And as a result, we don't know if some of it should have been applied to the federal grants or not. So that's a summary of what we found in cash disbursements. Really, given the amount of funds y'all are expending, that's pretty good. And like I said before, I think, and historically what we found with this town is when somebody told them they were doing something wrong, they corrected it and tried to do it right. If you turn to page 12, here's the good news, if there is such a thing in one of these reports. Last year, there was a material weakness that went around capital asset accounting. Basically, there were completed items that weren't pulled off the construction in progress list. It just needed a little bit of updating. That has been fully implemented and corrected. Material weakness, by the way, is the most severe comment we can give. That says, we think if you don't correct this, you're going to have a material problem. The next level is a significant deficiency, and there was one of those also last year, and that was in inventory. There wasn't good enough tracking of inventory. Again, that problem's been corrected. So both your material weakness and your significant deficiency from 2016 has been fixed. This report, along with the financial statements, will be electronically submitted not only to the state who is your grantor, but will also be submitted at the federal level. And in effect, you can go up and look at Lyon's previous year's submission at Harvester, at the website, the clearinghouse website. So this is now all public information. The town also has a corrective action plan.
Yes, and I share with the board, so they have those, based on those, this is responding to those two deficiencies. So one of them is with the invoices or transactions, make sure that we're gonna follow, you know, making sure that all the approvals will take place. You know, either department heads, the finance, staff, and also the town administrator as required by our procurement policy. And then our response to the allocation with the attorney invoices, we're doing the same, just making sure that all that information, the allocation, all the account, the dollar amount is all, you know, is there. And so for the next audit, well, we'll be, you know, ready. So that's our response to it.
I do have a follow-up for the 2017 budget regarding contributions and donations. The actual adopted budget has a 0. So we're going to do some more research on that.
Yeah, we may need to change the budget to actual before we submit it to the state.
Yeah, the adopted budget by the board is, there's a 0 in that budget line item for gifts and donations under general fund.
So maybe.
What's in other?
Other has, other income, 9,000. Yeah, so we're gonna have to go with the
It may be how the budget was loaded into the system and re-downloaded, it's possible.
So if we could look at that before we submit, that'd be great. Good catch, Brandon.
Are there any more questions regarding the audited financial statements before I discuss the letter of those charged with governance?
I don't see any questions.
Now, this is a pretty robust town with all the grant activities and such, so we have a fairly lengthy management letter, and I just encourage the town council members to read this at their leisure, become fully aware of what's going on here. I'm just gonna kind of go over a high-level presentation of it. The middle of page 1 of that 6-page letter talks about under significant audit findings and qualitative aspects of accounting practices. The significant accounting policies are described in note 1 as Jim discussed. And then the last paragraph here, just want to reiterate to you that it does have some emphasis of matters of paragraphs regarding the amount of the federal funds to be reimbursed, as well as the ineligible flood costs that will have to be eventually reimbursed, which Jim had highlighted is just to make the readers more aware of what's going on, where it's put into the opinion unit, or into the opinion versus in within the financial statement. So it's just a matter of transparency, and just want to disclose that to you.
And this is the area where town staff believe we may have overstated the issue and not stated things properly, and wanted the board to be aware that, yeah, even though some costs were denied, again, they may be repackaged. Bottom line is, who knows where the town's going to end up in terms of allowable costs.
In the middle of page 2, where the bulleted arrows appear, just in the preparation of your audited financial statements or anybody's financial statements, there's significant estimates that are used in the preparation of the financial statements, and there's about a half dozen of significant estimates that we'd just like to bring to your attention. Once again, the amounts which will ultimately be reimbursed by the state under the various grants is frankly the very largest estimate for the town. And then the amount and composition of the match requirements relative to federal grants. This impacts FEMA and other grants, just to try to determine that matching component. The estimated useful lives of fixed assets and infrastructure and computing depreciation, that is a significant estimate as well. And then also the amounts on a payable that are ultimately going to be paid to Honeywell. The amount recorded in accounts payable is $437,000, and that is kind of a moving target as well.
That we left in the financial statements, we discussed it with management, etc. And even though Honeywell said we're going to forgive it, there's nothing really solidly written. And the big piece of that is the town is incurring additional costs as they're going along the wastewater treatment plant. So for now, for at least this year, we're leaving it in there, and next year will be reevaluated.
To be clear on that Honeywell at one point made a demand on the town for $500,000 of overruns. And paid $100,000 if it's asked back. It has to return. Honeywell committed to do that, but hasn't actually done it. And this is the remaining balance of what they requested as cost overrun, is that what it is?
That's right. At one point, though, it was our understanding that the auditors, that the board had agreed to pay Honeywell $550, at least formally or informally, and that's one of the reasons that it was booked as payable at that time.
And I believe that was 2 years ago.
Yes, yeah, absolutely. It's been a while.
Yeah, and I would maybe asterisk that slightly. I don't know that the board has ever formally agreed to pay that dollar amount. So I think it's important that we say that on the record.
Via the amendment.
I know, but it was still there were contingencies in the amendments, and the amendments are void essentially and not eligible to amend the contract.
Absolutely. We don't disagree with that. We're just saying 2 years ago, it looked like more likely than not that the town would pay that.
Understood, and don't disagree with it being represented here, but I just wanted to say on the record, we have not approved or agreed to pay that amount.
Does the outstanding water and sewer, 600,000, does it include this 437 from Honeywell? You know, of the water and sewer fund being the 600,000?
No, because again, it happened
It's in addition.
2 years ago, so.
Oh, okay.
So it's already, it was accounted for back then, so it's.
All right.
But we would see a pickup next year if we remove this, correct? So it's not
Yes,
hitting, to your point, it's not
It will.
last year, but we absorbed this
Yes.
already.
That's part of what's really hard with those is recoveries. They're not clean fiscal years with revenues and expenses.
Then just a couple more significant estimates is on the compensated absences, just an allocation between the funds on that. And finally, the collectability of the accounts receivable, basically on the enterprise fund areas. And then typically in this area, we'll talk about the most sensitive disclosures, and there's about a half dozen of those as well. The first one, which Jim talked about, is the suspension of the Tabor Emergency Reserve in Note 1. The second being the disclosure of the estimate of the amounts that will be collected from grants, also described in Note 1. Just so many of it regarding the grants. The amount of known flood costs which will ultimately be reimbursed by the grant in Note 12. And then Jim also talked about the cash flow analysis and cash flow concerns of the town going forward. And then the subsequent events disclosed in Note 13. Top of page 3 talks about corrected and uncorrected misstatements, i.e. the audit adjustments and such. So with town finance and their contract account, we proposed no entries to the general ledger. However, significant adjustments were proposed by Mr. Marshbanks in the consulting agreement for some unrecorded accounts payable related to grant reimbursements of about $43,000 and additional deferred and unearned grant revenues about $40,000. So relative to your annual budget, very insignificant audit adjustments. So it's just a lot of credit given to the town finance and it's working with its consultants and getting the books really ready for us to come out and audit, roll up our sleeves and do auditing procedures versus accounting procedures. And then under current year comments, I'm going to go through it fairly quickly, but kind of let Jim jump in and throw in his comments as I'm going along. But the first one is service and organization internal controls, and the fact that you employ several organizations perform contract-related tasks, and as a result, you're dependent on their internal control structure and such. And our profession has what they call a SOC 1 or an SSAE report that kind of discusses their internal control environment and renders opinion on how they are operating. So we just recommend that you review your contractor list and determine if any of these internal control steps can be looked at or their audit can be referred to in placing reliance upon their systems versus us really having to dig in deeper and work with town management and determine the controls behind it. Under cash repayment to the state, Jim talked about this already, and the fact that the town owes the state $9.5 million. Once these amounts are known, the Board of Trustees should formally put it in a resolution, but it's going to be, once again, a moving target until a lot of this mitigation gets handled.
One of the things we're suggesting here is that the towns start to carve out cash that they can't give away. And so start to say to the state, no, you can't touch that because we need that for bond reserve. No, you can't touch that because it's conservation trust fund monies. No, you can't touch that for whatever reason. and get to the point where the state understands basically where the town has cash that they can do away without either impacting future ability to provide services or debt covenants. So, or statute.
And then regarding court fines, lines like in other municipalities, the internal control systems surrounding tickets and courts, just with the amount of cash going there, we just like to have you look at implementing some other compensating controls, and such as on a weekly basis having the judge and the prosecutor consider receiving a report of all reduced or removed fines, kind of review them periodically to see if it looks reasonable. You know, that's just an area that misappropriation of assets can occur. Under budget reporting, the financial reports to the Board of Trustees, the budget is split in monthly increments. We just want you to maybe dig deeper a little on that, and rather than straight lining it, try to look at cyclical patterns on a monthly budget to see if it's more relevant to analyzing the budget to actual as you're going throughout the year. Land held for investment, Jim spoke about that as well previously, and we just recommend that before the transaction is entered into, the Board of Trustees determine which funds will receive the proceeds of these investments once they are realized and sold. Under utility receivables, the billing receivables are somewhat unusual. In the majority of the receivables are 73% current, and there's 15% that are past due. We just want to have you consider taking a look at the cost benefit of re-implementing a service shutoff policy, just because the fact that you've got 15% of it that is you know, out there 90 days or so, it's just something to consider, you know, your internal control environment, and take a look at that service shutoff policy once again. Under allowable costs, Jim talked about this already, about grant compliance following the CFR 200, and this is really resolved. Well, why don't you elaborate this? And this is what we talked about.
This is one where services were paid for before they were received. Prepaid support package was what they called it, 52 hours of services. So DOLA looked at this and said, look, our contract, our grant has 2 more months to run, right? But you've got a 12-month contract out here, so we'll give you 2 months of it, right? We believe that it could be, again, depending on how the people who close out these grants come in, they could throw it all out and say, when you charged us or charged the grant for this transaction, nothing had been received. And because nothing had been received, and because this is a year-long contract, everything could have been received after the grant period. So we're going to question it all. We don't know whether it's reasonable and necessary. We believe that someone could come in and question what DOLA did and say that 944 is not allowable because the town hadn't received anything. The town hadn't received a benefit, and again, nobody knows what the town would have received. What this highlights is the fact that depending on what the people who come in to do the final closeout feel like, and that's a poor phrase, depending on how much they want their I's dotted and their T's crossed, what they're going to do. And the best analogy I've got is when you get pulled over by an officer and you're over the speed limit, whether you're going to get a warning or whether you're going to get a ticket, if they want to write you a ticket, they're going to question the 944 bucks. They're going to give you a warning, they're going to say, no, it's okay. And our internal discussions have been, well, in some ways, you could almost say that these costs were encumbered. So DOLA should have allowed it all, or DOLA should have allowed 0. And you can get to DOLA should have allowed it all, because it was encumbered before the end of the grant period. And that might meet the term obligated. It probably doesn't meet the term incurred, but it probably meets the term obligated. And again, to us, this is a good point to go back to the estimate of how much is ultimately gonna be allowed. Because I think you can get to 3 different answers legitimately on this transaction.
Like every other transaction.
Well, yeah, this one's just got a little more wiggle room.
We have some.
We were glad it came up now,
Yeah.
because this was, actually it was for our GIS contract, and it was, all this new software we were incorporating, and we needed that support package. Would not have even thought about it, that the grant ended 2 months before the year was over. So good to point out now, so we don't incur something like this that's much larger.
Maybe this is directed to staff more than auditors, but is this gonna be, are there gonna be similar problems to this on some of our other grants that we're looking at? Concerned about the deadlines, like the utilities grant on the Eastern Quarter, we have to watch out. And we couldn't, if we have that deadline, and we know services are going to be incurred, but they're not actually being incurred yet, prepaying them may raise similar flags, right?
Oh, we don't prepay any
That's
actual
probably the wrong term.
No, what we have to do is the federal grants all have a timeline. You have to request an extension, like it could be anywhere, some might be a year, some might be 90 days before the end to prevent that from happening. So our grant staff are on top of those deadlines, constantly requesting extensions relative.
All right, and I'm gonna move on to the segregation of duties area and payroll. And you had mentioned that earlier, but basically, being a significant component of your expenditures, payroll, the internal controls begin with separating the payroll and human resources function. Operationally, these tasks have been split as human resources done by the city clerk's office and payroll done by finance and accounting. We just recommend that the town segregate these payroll functions to where the human resources should only be able to add, terminate, and set rates of pay, and then the accounting staff or accounting function should only be able to pay based on what is set up by human resources. So maybe Jim can elaborate on maybe what his observation was during the field work on that for you.
Well, what happened was, they got, as you all know, you received a DOLA staffing grant, hired HR. In the past, it's all been sitting in the city clerk's office. Accounting's taken over some of the payroll function. Some of the payroll function remains over here. This is a perfect time to split it, because in effect, you can build a brick wall that now says the HR function can't pay anybody more than they should be paid, and the payroll people can't pay anybody who's terminated or whatever, it shouldn't be here and shouldn't be paid. So this is just a great time to put in this segregation of duties.
We have the ability.
And the software will do it. Your staff's looked into it, your software will do that.
And then it's also under that payroll function, just as you are getting more and more employees for the town and with all the grant activity going on, we just want you to maybe consider implementing another compensating control with direct deposits, just examining that on a periodic basis, looking for reasonableness of numbers or duplicate numbers to see if there's any fictitious employees or anything like that. Then also under on top of page 5, under the town manager's contract, we were just unable to locate a current contract for the town manager, and we recommend that you take a look at updating this contract to make sure it's current.
Can I interrupt you? Were you able to identify or look at the old version, or you couldn't find one at all?
No, we found one,
Oh,
we just
okay.
gold. And plus you've now got new legal counsel and times passed. Yeah, it's just maybe time for the benefit of both parties to look at it.
Okay.
Then also under the credit card area, remember your staff is currently tracking amounts of missing receipts and sales tax paid under the town's credit card. We just want you to take a look at the town continuing to enforce its policies regarding the paying sales tax on purchases, and also enforcing your policies regarding receipts to meet the substantiation requirements for your internal controls as well as that of the Internal Revenue Service on allowable expenditures. Under GASB 87 on leases, just want to make you aware that the town is going to be subject to this going forward in 2020, where a lot of the operating leases, what they used to call operating leases, is now ultimately going to be capital leases and have to really just go on to your financial statements and your balance sheet. So just that's gonna be something that's gonna be looked at in 2020 for implementation.
And that's also got a Tabor implication, we believe, potentially, because now it's kind of hidden and it's not really reported anywhere except here's our next 5 years of obligations. Well, now it's a liability, and if it doesn't have the multi-year obligation clause in there, I mean, if it doesn't have a non-appropriation clause, does it become a multi-year obligation? So that's the biggest concern we have with those operating leases as much as, well, and identifying them.
So that's essentially our report under the letter that those
On
charter
that last one,
governs.
don't our leases have non-appropriation clauses? I've seen that before, that if we're a town government, we can only appropriate year to year. If we don't appropriate next year.
Most, it depends on who you're dealing with, okay? If you're dealing with somebody that deals with a lot of governments regularly, then yeah, they may throw one into a copy or operating lease. If you're not, then unless the town's looking for it, they're not gonna put it in there.
Our standard form contracts and leases have that provision in there, don't they?
All we lease is a copier. I don't know what
Okay,
else
all
we
right,
have.
okay, all right.
Is there any questions about the letter to management? Once again, we'd like to thank the town staff for getting this ready before July 31st. It's great to see this finally.
I was just gonna dare say, I think this seems like an improvement over last year, both in terms of timing and performance. So I just wanna thank the staff for their hard work. I think this is really impressive considering the amount of money that we're managing, that we are not really staffed or accustomed to. So I think this is a pretty successful audit for the town.
Yes.
Thank you.
I also want to say, this is the first time I've been on the board reviewing an audit, and I appreciate the thoroughness and calling the board's attention to things that we need to focus on that we might not have otherwise seen. And thank you for doing that. I appreciate that.
Any comments from staff? I want to say thank you for all your efforts to address the issues from last year. Honestly, those were really large. I can't imagine what it took to fix the inventory issue, but.
And Carl was a lot of help too.
Good.
Of course, everybody's sitting back here.
Yes, everybody back there.
Well done, everybody, thank you. All right, if there's nothing more on the audit, we'll have a motion to go into executive session.
We want to,
Do we,
I'm sorry, we want to have a motion to accept the 2017 financial audit. Maybe, no, I'm seeing the
I don't think it was
attorney.
noticed in this,
motion to accept.
it was not in this agenda, so we need to wait to a further.
I actually think it's not bad to do it by resolution. I mean, I know.
Okay, because
we
I'll be
did it
August
in-
6th. But for us to be able to file it with the Department of Local Governments, we have to at least acknowledge that you've received it and accepted it. And then we can bring forward a formal resolution. How'd you do, Bob?
okay, so I would move that we acknowledge the receipt and acceptance of the audit with further action to be taken later on approval of it.
Is there a second?
I'll second that.
Maybe we can just slight amendment to say that we've received the audit report. Would that be okay with the attorney?
Yes.
A resolution.
And direct staff to prepare a resolution for the next meeting to confirm, kind of to, what's the word? Ratify this action,
Ratify that it's been submitted to the
Yes.
state, because it needs to be submitted.
because it has to be
before
submitted
then.
before our next meeting.
I'll second the amendment.
Okay. Any further discussion?
Just a quick question, will that be then on the agenda for the August 6th?
It will be. Yes?
Yes. And I forgot you were there. Thank you for speaking up. Do you have any further comments, Mayor Burton?
My only comment is that, yes, similar to the audit committee meeting, I think was a very thorough and beneficial audit.
All right, thank you. Hearing that, we'll call for the vote. And the audit is, notice of the audit report is accepted, and direction is then given to staff to prepare it by resolution for the next meeting. Okay, sorry, thank you for the, we'll have a motion to go into executive session now.
I move to go into executive session pursuant to CRS sections 24-6-4024B and 24-6-4024E for the purpose of determining positions relative to matters that may be subject to negotiations, developing strategies for negotiations, instructing negotiators, and for receiving legal advice on specific legal questions from the town attorney regarding the non-payment of utility bills by Alliance Properties LLC. I further move to reconvene the board meeting at the conclusion of the executive session for the purpose of taking any action that is necessary and to resume the July 23rd, 2018 regular board of trustees meeting.
Great, is there a second?
I second, and I would like a brief discussion of the motion.
Okay, well, once it's ended, then we can have a discussion. Do we generally have, is there any further discussion?
Yes. I support the motion to go into executive session. Colorado state law governs confidentiality of utility account information, and as board members, we need advice from our attorney regarding what you can and cannot say about utility accounts, even in public sessions of the board. However, once we receive that advice, I believe it is extremely important for all subsequent discussions of this matter to occur in a public, on-the-record forum, subject of course to what must be kept confidential based on our attorney's advice. We've been discussing whether we should have an information gathering workshop, whether we should put an item on a future meeting agenda directing staff to take action, whether we should put an item on a future meeting agenda to consider municipal code changes, or whether we should put an item on a future meeting agenda to consider exercising the Board of Trustees authority under municipal code section 13-1-154 should be matters discussed in public and on the record.
Okay, your comment is noted. Is there any further discussion? Hearing none, we'll call for the vote. Go into executive session.
I forgot I was going to include the votes.
Well, I still have to.
Right,
I
so
have
hold
to
that other part.
Let's be vote.
Okay, so we're
Will
you give me like
Yeah,
2 minutes?
Take your time.